Mindsetters, yes, I am back. Yes, it is 3 o'clock and you're hanging out with Looney and Martin this time. How are you, Martin?
I'm good, thanks, Looney. How are you doing?
I'm good, thank you. What are we doing for the Mindsetters today?
Well, today we're working through a possible exam question.
Okay.
We're going to go through an income statement and a balance sheet today.
All right, grade 12 accounting learners, I hope you guys are ready to have fun with Martin, go through your income statements, and I'll be learning with you because I never did accounting and I never really liked it, but I like it today because Martin's teaching it. Anyway, Mindsetters, just to remind you, the Learn Extra exam revision marathon competition is going on. So if you want to win yourself one of these awesome babies, all you need to do is download the show notes from either the week or from today, and then what you'll see is that on the show notes, the last page at the bottom, you have a race number. What you do with that race number, you fill it in on your entry form. I will post links on our Facebook page for all of that information, just to show you what we have on our Samsung tablet. It is the awesome Learn Extra exam revision material. So this is all the content that's there, and remember guys, our content is updated on a daily basis. So if you've got a Samsung Premium smartphone or a Samsung tablet, you can access the Learning Hub on your Samsung Hub, on the Premium smartphone, or your Samsung apps from your tablet. So you simply go to the brands, you go to Mindset Learn, and then the Learning Hub will pop up and you'll see all the contents that we have on the Learning Hub, the Learn Extra exam revision content. Some is for free, and the prices are very cheap, guys. So you can buy this content for like what? R8.37 for like a textbook and a video. It shows you everything that you need to do, guys. It's very, very awesome. If you've got a Samsung device, download this Learning Hub and help yourself to pass those exams. To hit me up on Facebook, all you need to do is go on to facebook.com/learnextra. Our Twitter handle is @learnextra. You can download the show notes, the videos, and the schedules on learnextra.co.za/live. So Martin, I think it's time for the lesson now.
Okay, thank you very much, Looney. Thank you, Mindsetters. Today we're going to be looking at a past question paper from a 2011 IEB exam, and we've chosen this question because this question actually has got an income statement as well as a balance sheet for you to do. Now, I know that in the past we've been working through cash flow statements, we've been working through income statements, and all of the different questions that appeared in your prelim. Your prelim, though, did not have a balance sheet. That does not mean that it cannot be asked in your final, so don't neglect the balance sheet. Today I'm going to go through a question that has an income statement combined with a balance sheet from a past paper, and you're going to see how important this skill is to learn the balance sheet and to find out where the various items go. Mindsetters, what I often tell my classes, accounting is almost like a jigsaw puzzle, almost like one of those Sudokus. When you're doing an income statement or a balance sheet, you're going to get different numbers that appear all over the place, and you're going to have to put them together in the right place in an income statement or in a balance sheet, and you have to know where everything goes. What this means is that you have to learn the format of the income statement and the balance sheet very, very carefully. You don't want to get into your final exam and wonder, is inventory a current asset or a non-current asset? You need to know these things very, very well. And before I came onto the show today, we had a question that was posted on Facebook where somebody asked, how can I remember the different format of the income statement and the balance sheet? I know it's a lot to learn, Mindsetters. I know there are many notes to learn. I know that the income statement has a specific format. What's important is for you to try and develop some tricks as to how to learn the different format. I'm just going to share one of them with you. So for instance, if you are doing the note on trade and other payables, one way that I sometimes suggest that you remember it is by looking at the first letters of some of the words that appear there. So I'm sure you can think about what normally appears at the beginning of trade and other payables. It's usually a C, an I, and an A, and maybe if you watch some crime shows on TV, you might know that CIA is like the Central Intelligence Agency in America. People often know about the CIA. So you could remember that the C stands for creditors, the I stands for income received in advance, and the A stands for accrued expenses. So I know that there are some other things that appear underneath that, but you could use little memory tools like this to develop your own ways of remembering it. So maybe you could share some of your memory tools with other Mindsetters. maybe try to put them on Facebook, send them to us. If they're good, we'll read them out on the air. Remember these formats. The formats are important. Okay, so without further ado, let's get to one of the questions. I'll just take this away. And let's look at the question that we're going to work with today. So our question is one which has an information booklet, and we're dealing with the accounting records of Glamorous Limited as at their financial year end, which is the 28th of February 2011. What we're required to do here, Mindsetters, is to complete the income statement for the year. Usually you're going to get something involving the income statement that you have to do. And the second part of the question is the part of the question that we haven't gone through yet, which is to complete the balance sheet. So remember, the income statement and the balance sheet go hand in hand. You may also sometimes hear the balance sheet called the statement of financial position. Both of these items go hand in hand, and they are the two most important financial statements that any company in South Africa or anywhere in the world is going to prepare. So you have to know how to do these, learn the format well. Let's have a look at the question that we're given. So we have to take a look at the information about the business. It says here, information relating to Glamorous Limited. It is a small company that specializes in bringing high fashion items from the various runways of Europe back to South Africa for resale. Looney, do you like fashion items?
Fashion items? Not really.
Okay, so maybe this question won't be that appealing to you.
No.
But we're going to teach you the accounting about it anyway. Think about your fashion while you're doing the activity. So we've got all of these balances that have appeared, and they're extracted from the pre-adjustment trial balance. So here they are. We're going to come back to them as we need them. Further on come the first adjustments. So let's take them step by step. When you're doing these questions, you should just see each of them in isolation. Do one, put it in the right place where it's supposed to go, and then move on to the next one. Most importantly, keep calm, because you're going to be able to do them if you just think logically about them. So our first adjustment says the bank statement for February, so this is a bank statement, was received after the trial balance was drawn up. The following differences and omissions were discovered. So here's our first one. Our first one has bank charges of 260 Rand. I'm sure you've seen these adjustments before. Bank charges you've probably done all the way since grade 10. Bank charges, remember, is when the bank charges you money and you discover it on the bank statement. Think back to your bank reconciliation section so that you remember how to deal with the bank charges. These bank charges are costing me money, and therefore they are expenses to the business. So what we're going to have to do this adjustment, we're going to have to find the bank charges in our income statement, which is over here. And you can see, here it is. They have already filled in some of the questions, or some of the numbers have already been filled in for us in brackets. This is supposed to save you time. Don't change these numbers. You can assume that they're correct if they appear on your answer paper. But we are going to do the calculation that needs to affect our bank charges. So we're starting off with 2,150 Rand. Those are the bank charges that appear in the trial balance. Now we have to adjust them, and we have to adjust them by the extra 260 Rand that we have not yet recorded. Very easy to do that. We're just going to go to the bank charges, and we're going to add the 260. Okay? That is the first part of the adjustment. Remember, Mindsetters, every single adjustment has got at least 2 entries that need to be made. So here is one where the bank charges have gone up by 260, and now you need to think, where is the other part of my adjustment? Very easy. The bank charges affect the bank account. That money is being paid out of our bank account, so what that means is that my bank account is going to decrease. So if we go back to our trial balance, which I'm going to get over here, we see that there is bank of 24920. This amount is what our bank balance is before adjustments, and if there are bank charges, the amount is going to decrease by 260 Rand. Notice as well that the question has helpfully told us that this is a debit. In other words, it is a positive bank balance, so you have to know where on the balance sheet this goes. I'm going to ask all of you out there to think about where it goes. See if you're right if I tell you the answer. where does bank go in our balance sheet? Think about it. Bank is a current asset, and in our balance sheet, we have a section for current assets, which I'll get over here. Here is our balance sheet. And remember that current assets is made up of three very important things. You need to know these. It's important to know where everything goes. It's made up of inventory. It's made up of trade and other receivables. There they've printed the heading for us. And here they haven't printed the heading. You need to know that it's going to be cash and cash equivalents. What are cash and cash equivalents? I'm sure you know the answer. That is anything that is cash or will soon be converted into cash, such as the bank account, such as your petty cash, such as cash float, and any savings deposits, savings accounts or fixed deposits that are maturing this year. So bank is going to appear here. You'll see that they have asked us not to do the note, but here is a bracket which they want us to open and indicate the whole calculation across the bottom there. So this is a different type of question to the ones that you may have seen in some of your textbooks, where you have to do a full set of financial statements, including all of the different notes. Okay? Here in the answer book, they're not giving us the notes. They want us to do it straight on the face of the balance sheet. So let's have a look at what cash and cash equivalents should be. I normally tell the people in my classes what you should start off doing is write down all the numbers that need to go in there first, and then you can get marks for them and then make the adjustment. So you can see here already two items that must go into cash and cash equivalents. Here is bank and here is cash float. So the amount is 24290 and 600. Let's remember that. 24290 and 600. I will just write them here. 24290 is my starting balance in my bank account, which would go here because it's positive. And then my second piece of information is my cash float over there, which is 600 Rand, which I'm also going to include over here. Now we're going to get to our adjustment that we've just needed to make, which is that because of those bank charges of 260 Rand, which we subtracted here already, we have to do the same calculation on the face of the balance sheet by subtracting 260 Rand. Mindset is these calculations are very, very, very important. Your examiner at the end of the year is going to expect you to indicate your calculations in brackets, and you should show every single calculation that you make. In case you make a small mistake, then you can get part marks for all of the numbers you've written down. Okay, so that's the first adjustment. Let's have a look at the second one. Also, when doing the question, tick them off, then you know it's completed. You don't have to worry about it again. Our next one is interest earned on current account, 130 Rand. So once again, this came from our bank statement. That's interest that we have received. So what that does is it increases the amount in our bank account. At the same time, we have to record it somewhere else. I'm sure you know where it goes. Our interest earned is going to go in the income statement. Let's go back to it. Going to go into the income statement over here. And remember, interest has got its own special place at the bottom. If I have earned interest, clearly that interest is going to be an interest income. So in my section on interest income, all I'm going to do is add the 130 Rand. Let's check that that number is correct. I'm going to add the 130 Rand that I have earned on my current account. But at the same time, the interest that I've earned is going to get paid into my bank account. So what I have to do is I have to go back to the place where my bank is, which is the balance sheet. And here in the balance sheet, under cash and cash equivalents, where I know I'm finding bank, I have to add my 130 Rand. It should be clear to you, mindsetters, that you don't just, when answering an accounting question, you don't just try and finish the whole income statement at once and then do the balance sheet afterwards. That's going to waste time because you're going to have to go back to the various adjustments and read and see where the two items are affected. It's important to see this as one whole question that you're doing together. You're going to complete your cash and cash equivalents over here at the same time as completing your bank account. Looney, I want to know if maybe some mindsetters could send in the answer to my question.
All right.
I've got one question that I'd like to ask everyone.
Okay.
Let's say that this bank account number that I have at the beginning was not a debit, as is indicated here, and let's say that instead of this being a debit, it was a credit. I'd like to ask some of the mindsetters to write into us and tell us where in the balance sheet will it go if this was not a debit, but if instead it said a credit. You need to know these things, think about it, and see if you can answer the question. All right, let's look at our next adjustment. Our next adjustment appears at the bottom here. It says the bank statement also reflected an RD check of 1,650 Rand. RD check, I'm sure you remember it from bank reconciliation last year and from your grade 10 work when you learned all about the different bank charges and so on. An RD check is a check that has been dishonored due to insufficient funds. And this check had been received from a debtor in settlement of his debt of 1,700 Rand. So the first thing we have to do is we have to realize that this 1,650 was no longer received in our bank account. The debtor hasn't paid because the funds are insufficient. So what I'm going to do is I'm going to go back to my cash and cash equivalents, and I'm going to subtract the amount of 1,650 Rand because I never received that money in the bank account because the debtor hasn't paid me. Now, that debtor, once again, owes me this money. He owes me still 1,700 Rand. So what we have to do with that 1,700 Rand, he owes us that money now, so we have to take it to the place where we find debtors control. So we're coming up to our first ad break for today. What I'd like you to do, think about it during the ad break. Where am I going to record the amount of 1,700 Rand that the debtor now owes me again? Think about where it is in the financial statements, and we'll tell you after we take a short break.
All right, mindsetters, make sure you do think about those questions, and we'll see you straight after this break. Welcome back, mindsetters, from that break. I hope you guys are tuned in. Well, Martin asked a question before the break, and then we've got responses from Tyrone and Garabo. Tyrone says bank overdraft current liabilities, and then Garabo also says positive bank balance will go under current assets in the cash and cash equivalent, and if it's an unfavorable balance it will go under trade and other payables, in bracket current liabilities. High five. Martin says you got it right, so high five to you guys. Martin?
Well done, Karabo and Tyrone. I know you are prepared for your finals, so good job. Okay, so I asked you also to think about this during the break as to what we're going to do about this debtor whose check has been dishonored. We've already recorded the fact that we've now not received the 1,650 Rand, but we saw that this check had been received from the debtor in settlement of his debt of 1,700 Rand. What you should have seen by now is that if he's paid us 1,650 for a debt of 1,700, there must have been a discount that we've given him, and that discount would have been 50 Rand because it's the difference between the 1,700 and the 1,650. So we have to do two things. I'm sure you remember this transaction from some past accounting. What we must do is we have to record the fact that that debtor owes us 1,700 Rand again, because he actually hasn't paid if his check has been dishonored. So you have to think about where we find debtors control. We started off the year with a debtors control balance here of 37,800. That 37,800 would go in the note that deals with debtors. In other words, it goes in the note where we record money that is owing to us, money that we still have to receive, money that is receivable. Yes, I know you know where it goes. It goes in trade and other receivables. So on the face of the balance sheet, we'll write the number that we started off with. I've already done that during the break. 37,800 appears in trade and other receivables as our opening balance for debtors control. What we now have to do is record the fact that this debtor owes us 1,700 Rand more, or our debtors in total owe us 1,700 Rand more because they haven't paid us. So the adjustment is very easy. We're going to add 1,700 Rand over here to trade and other receivables. But now it doesn't balance because we've only subtracted 1,650 from bank and we've added 1,700 to trade and other receivables. Where does that extra 50 Rand go? I'm sure you've got the answer. Have a look. We're going to go back to our income statement, to the section that deals with discounts. And there we have our discount allowed. Remember I said to you that it's clear that the debtor was receiving a discount of 50 Rand because he paid us 1650 in settlement of his debt of 1700. Now, we haven't given that debtor the discount anymore. All our discounts in total are 940 Rand, but we have to subtract an extra 50 Rand because that debtor now no longer qualifies for a discount because he didn't pay us in time because his check was referred to drawer. So those are the three entries you have to make for this adjustment. You're going to have to add 1,700 to debtor's control, subtract 50 Rand from discount allowed, and subtract 1650 from bank. I'm sure you've seen it before. I'm congratulating you if you got the answer right. Okay, let's look at number 827. This is one that might be a little bit unfamiliar to you. It says, check number 827 for 4,000 Rand appeared in the bank statement, but not in the CPJ. In other words, this is a check that appears on the bank statement, but we have not yet recorded it in our books. We need to investigate this, and upon investigation, it was found that the check had been stolen from the checkbook, and the signatures had been forged. So there's some fraud or something going on in our business, and what this has happened is that we have lost some money due to this fraud. 4,000 Rand has been stolen from us. So what we would do if something is stolen from us, we would try to recover the money in some way by looking at our insurance, and the insurance has agreed to pay out 75% of this amount in April 2011. So let's try and make this a little bit easier to understand, because sometimes the accounting adjustments, you have to think a little bit about what's actually going on. Let me say it in simpler English. What has happened is that we see on the bank statement that 4,000 Rand has left our bank account. We don't know why, so we investigate, and we found out that somebody stole a check from our checkbook, forged the signatures, and took our money. But we were insured against this type of thing, so we're going to get 75% of the money back, but we're not going to get it back now, we're going to get it back in April, and our financial year ends, you'll remember, our financial year ends on the 28th of February 2011. So we're going to have to wait until April before we get that money back. So now, what is the adjustment? Well, when I see these insurance payouts, I normally suggest that what you should do is take the transactions separately. The first thing that's happened is that we have lost some money due to fraud. So what we will do is we will record the 4,000 Rand we've lost due to fraud in the following way. We will go to our income statement and create a special item called loss due to fraud, or you could also call it loss due to theft. And this is an expense to the business because we have lost money, it is a cost. So we've lost so far 4,000 Rand. And because that 4,000 Rand appeared on the bank statement, it means it has left our bank account. So we're going to go back to our bank account, which appears in cash and cash equivalents over here. Let's get it again. And we're going to subtract the 4,000 Rand that we have lost. Okay, so I'm going to, you can see the calculation is getting longer and longer. I'm subtracting the 4,000 Rand that has now been stolen from my bank account. Now let's look at the second part of the transaction, which is that the insurance has agreed to pay out 75% of this in April 2011. So we're going to get 75% of that amount back. Let's just quickly calculate it. I'm sure some of you can do it. It's going to be 75%, or 0.75, times 4,000, and the amount is 3,000 Rand. We are going to get 3,000 Rand back from the insurance, but we're going to get it back only in April. So the insurance owes us 3,000 Rand, and that is called an accrued income, or it could sometimes also be called debtors for insurance. It depends on what your textbook, what method your textbook follows. So that 3,000 Rand is going to be paid back to us. Either way, this 3,000 Rand is money that we have to receive, so we are going to record it in trade and other receivables. Trade and other receivables, we've already recorded the extra 1,700 that other debtor owes us, and now the insurance owes us 3,000 Rand, so I'm going to add 3,000 Rand to trade and other receivables. At the same time, though, we have to go back to our income statement, and we have to realize that now our loss is not 4,000 Rand anymore, because we're going to get 3,000 Rand of it back. In fact, these people have only stolen 1,000 Rand from us, because even though they took 4,000 to begin with, we're getting 3,000 back. So the expense, our loss due to fraud, is going to be reduced by 3,000 Rand, which means that it will only be 1,000 Rand. Okay, I'll always leave the brackets open here because there might be other things that make the adjustments, and at the end you close the brackets and total everything in the money column. That is the technique to answer these questions. All right, let's have a look at our next adjustment. We've done this one now. Check number 829, issued to Rexall wholesalers for stationery purchased, was entered in the CPJ as 566 instead of 656. So what we did is we bought stationery from these people. We entered in the CPJ that we paid 566, but that was wrong because in actual fact we paid 656. The thing to do here is to find the difference between the two numbers. So it's going to be 656 minus 566, and the answer comes to 90 Rand. So the first thing is always to find the difference. Let's write it down, 90 Rand difference. And this 90 Rand, we now have to record in the CPJ. We've recorded that we've paid 566. We actually paid 656. So what is happening is that our bank account needs to be decreased by 90 Rand. Okay? Once again, we're getting back to the cash and cash equivalents, which appears here. And cash and cash equivalents needs to be reduced by a further 90 Rand because that money for the stationery has now left the bank account. We just didn't record it properly. At the same time, though, we must go back to our income statement and we must realize that our stationery amount that appears here of 1,860 Rand is wrong. We haven't only bought 1,860 Rands worth of stationery, we actually misrecorded it. It's an extra 90 Rand that we have bought. So we fix it just by adding 90 Rand to stationery. So again, the adjustment, add 90 Rand to stationery, subtract 90 Rand from bank. Let's now have a look at the next adjustment. These are all the adjustments from the bank statement, and we've dealt with all of them. Okay, now 2.2 says the following. After a physical stock take, it was found that stationery used for the year amounted to 1750. You must take care in reading these questions very, very carefully. It tells us that the stationery used for the year was 1750. I'm sure all of you have done the physical stock take adjustments before. Remember, they are always with two things. It's usually to calculate a trading stock deficit when you see that physical stock take. And the second part is also to calculate stationery or consumable stores, any type of consumable stores on hand. You need to remember that stationery on hand and trading stock go into note 4, which is your notes on inventory. But what's interesting about this question is they haven't told us how much stationery is on hand. They have told us how much stationery has been used. So we have to approach this question in a different way. They are telling us that the stationery we used for the year is 1750, so that is the amount that needs to appear in the final column of stationery in the income statement. Because remember, your income statement records the stationery that you have used, not the stationery that you have bought. So I bought 1,860 Rands worth of stationery this year, and then there was that mistake which we've just fixed, that I'd misrecorded it, and then it's 90 Rand more. But now, there's only 1,750 used. So I didn't use all of this. The difference between what I've purchased and what I've actually used is my stationery on hand, and that must be recorded in note 4 for inventory. So let's quickly do the calculation. If I'm looking at the difference between the stationery that I've bought, I'm going to take the 1860. Let's just clear that. I'm going to take the 1860 that I bought, and I'm going to add to that the 90 that I adjusted it by because of the mistake that we did in that previous adjustment. That gives me 1,950. Now, if I subtract the 1,750 that I really used, then it's clear that I've got 200 Rands worth of stationery that is actually on hand at the end of the financial year. So to show that, I'm going to record minus 200 here, and if you do that sum, that gives you the total. Oh, sorry, I did it in the wrong place. Should appear on this top line, minus 200. if you do the sum 1860 plus 90 minus 200, it gives you the answer of 1750, which is the actual stationery that you've used. But this 200 must be recorded in the balance sheet in the note on inventory. Remember, the note on inventory, just in case you forget, is your trading stock, and it's any consumable stores on hand, which could include things like stationery, packaging, and the other consumable stores like water for the water cooler or tea and coffee that the business uses for its employees. So we're going to have to indicate these two amounts together. So let us put in the meantime the stationery that's on hand, which is the 200 Rand that we've just calculated. Remember, in your balance sheet you put the items that are on hand. In your income statement you put the items that have been used. So once again, that's how we've done the calculation. Our next adjustment tells us this. It speaks about a provision for bad debts, 2.3. With the impact of the recession on the business, it was decided that the provision for bad debts be increased to 2,600 Rand. Okay, this is one type of adjustment that you must know how to do because it can end up being in two different places. We are going to adjust the provision for bad debts to 2,600 Rand, and we have to now look at the information and see what the provision for bad debts was before. So here's my provision for bad debts, and I can see that it was 2,000 Rand. The question is asking us to adjust it to 2,600 Rand. So we have to increase this provision by an amount of 600 Rand, that I'm sure you can see the difference between the 2,600 that it should be and the 2,000 that it currently is. So we're going to come up for an ad break shortly. What I want you to think about during the ad break is when we are changing the provision for bad debts and we are increasing it to 2,600 Rand, what has to happen to that 600 Rand? Think about it, and we'll take a short break, and then I'll tell you the answer afterwards.
All right. Mindset is another question to think about during the break. So hit us up on Facebook with all your answers and your thoughts on that question, and we'll see you straight after this. It is from that break, such bright sparks we have on our page. Just a young shout out to Christine, Hope, and Garabo. You got the answer right, guys. Thank you so much for that. And then, Martin, we have a question from Lindy Wetahaselo. I hope I pronounced that right. And she says, for your bank overdraft and shareholders for dividends, it usually goes under your trade and other payables. But in some question papers, they are not included in any note, but are just written under your current liabilities only. Please just clarify that.
Okay, so that's a very good question, and the answer is that you can do it either way. So the question was, just to explain what the question said, under your current liabilities over here in the balance sheet, you usually have a section for trade and other payables, and then this is usually going to be note 10, and you would usually indicate all your trade and other payables, so creditors control, income received in advance, accrued expenses, and various other items like creditors for wages and creditors for salaries. Lindiwe, I think it was,
Yes.
asked, what are we going to do? Some questions have got shareholders for dividends shown as a separate item over here, and they also sometimes have bank overdraft shown as a separate item over here. Other questions have got all of them listed under trade and other payables in the note, and they don't appear on the face of the balance sheet. Just to clarify and to answer your question, Lindiwe, what we actually do, it doesn't really matter. As long as it appears in current liabilities, you can include it if you want to in note 10 as its own part of trade and other payables, or you can show it as a separate item, shareholders for dividends and bank overdraft. Different textbooks have got different methods, different companies have got different methods of accounting. As long as it appears under current liabilities, you can't lose the marks for the question because you've put it in the right place, but take care on how the question is structured. If you can see, my question here just has trade and other payables. It doesn't have a separate line for me to write shareholders for dividends. So when I'm doing this one, I would just include it in the note number 10. Okay, so I hope that that answers your question.
All right, can we take one more question? I
Sure.
just seen it now. Lance Coopbetter is asking, do we use double entry principle on financial statements?
We do use the double entry principle, so that means we're going to debit one account and we're going to credit another account. But usually, when we are preparing the financial statements, we don't indicate what's being debited and what's being credited because we're not doing a general ledger. What we're doing is we're just subtracting or adding to the relevant numbers. But in practice, when you're doing the financial statements, you would actually put all the entries in the general ledger. Also, another important thing to remember is that in some questions, you only have to do the income statement. So you would only make any entries that affect the income statement, and you would leave out all of the entries that affect the balance sheet. Other questions might just have entries that affect the balance sheet, and then you'd have to leave out the income statement. So you should be doing the double entry principle all the time, or at least thinking about which two accounts are being affected. But in truth, you don't always have to show both entries because your answer sheet only has part or an extract of the financial statements that it's asking you to do. Okay. So I hope that answers your question.
Thank you.
All right, so let's go back to the previous adjustment, which was the provision for bad debts adjustment, which we had over here. And many of the learners got it right. Some people wrote during the break, they wrote us the answer. We have to increase this provision to 2,600 Rand. We have to increase it from 2,000 Rand to 2,600 Rand, and before the break we calculated that the increase was 600 Rand. What this then means is that we are setting aside more money for bad debts. So we are losing money, we're increasing the provision, so our provision for bad debts adjustment is going to be an expense to our business. What that then means is we need to go to the place where all the expenses are, which is the income statement, and we would write at the bottom here, provision for bad debts adjustment, and that would be 600 Rand. Okay, very important. Let's say that the question said that the adjustment needed to be changed from 2,000 Rand, it needed to be decreased to 1,600 Rand. Now we are setting aside less money for provision for bad debts, and what this then means is that that adjustment is an income. So I said before the break that there can be two possible places to put this. We either put it as an income or we put it as an expense. Your rule is, if there is an increase, then it is an expense, because we're setting aside more money. If it is a decrease, it is an income. So just be sure that you go over that before your exam. But now, this is a double entry system, so we have to do something else. Our provision for bad debts must be increased to 2,600, and you should know that that appears in the note for trade and other receivables. Our question is not asking us to do the note, it is just asking us to do the balance sheet. So here's the balance sheet, and here's our trade and other receivables. What's happening is that we normally subtract from trade and other receivables our provision for bad debts, because that is the provision that we've made according to the principle of prudence for money that we are not going to receive back from our debtors. So out of all of this that we are owed from our debtors, there is 2,600 Rand that is going to be written off, or that we're not going to receive. So our adjustment is simply subtract 2,600 Rand from there. It should actually be first subtracting the 2,000 and then subtracting the extra 600, but I've simply added them together like that. Okay, let's look at our next adjustment here. This one happens quite often, and I'm sure you've seen it. It's a classic question which often appears in textbooks. It says that an annual insurance premium of 18,600 Rand was paid and properly recorded on the 1st of June 2010. Now, the fact that this is an annual insurance premium means that we have paid this amount of 18,600 Rand to cover us for the whole year from the 1st of June 2010 up to the 31st of May 2011. Okay, so we've paid 18,600 Rand for all of those months. What I normally suggest doing is working out how much it is per month, and the way you do that is you take the amount of 18,600 and you simply divide by 12. So each month costs me 1,550 Rand. This 18,600 Rand is the same as 1,550 Rand per month. Now, we have paid that insurance premium to cover us for insurance from the 1st of June up to the 31st of May. But there's a problem because somewhere here is the end of my financial year. So what this means is that we've paid for more than the end of my financial year, which means that I've got a prepaid expense. And what we now need to do is calculate how much the prepaid expense is. Our financial year ends on the 28th of February. Let me just check that. I'm sure it does. Yes, ends on the 28th of February 2011. So because my financial year ends on the 28th of February, I've got this insurance, but I should only have recorded the amount that goes up to the 28th of February. So I have to subtract all of the months that go past that. So I need to now count March, April, and May, because it covers me up to the 31st of May 2011. I have to now subtract 3 months worth of insurance, which is my prepaid insurance. All I'm going to do then is multiply the 1,550 times 3. I still have that number in my calculator here. 1,550 times 3. That amount comes to 4,650 Rand. That is the amount of insurance that is prepaid. To do the adjustment then, I simply go to my income statement, which is here. The insurance number is wrong. It's too much because it includes 4,000, let's just get that number again, 4,650 Rand that was paid in advance for next year's insurance, because it should only cover me up to the end of February. The rest is prepaid. So I should subtract, sorry, I've written it down, 4,650. I've written it down here already. It needs to go somewhere else as well. Because insurance is a prepaid expense, I need to record it in my note on trade and other receivables. So I'm going to add here 4,650 Rand. People sometimes ask, why do prepaid expenses appear as assets in trade and other receivables? What is it that I'm going to receive? Well, the answer is very easy. I'm going to receive insurance for 3 months. My insurance company has to provide me with that service for 3 months. So that is why it appears as a trade and other receivable. The thing that I'm going to receive here is 3 months worth of service. So that way, if I have a tragedy like that check for 4,000 Rand that was stolen from me, I'm covered. My insurance is going to pay me out. All right, let's look at the next question here. And during the break, somebody asked this question beforehand, which I'm going to speak about now. It says a supplier overpaid commission to Glamorous Limited by 1050. And I think, Looney, we got a question on Facebook.
Yes, that was from Nomtandazo Nazombe. She asked, Martin, what is commission income?
What is commission income? Very good question, because we've got commission income in this example. Commission income is something very easy to understand. You just need to know if you appoint somebody to be an agent for you to maybe try and sell things on your behalf. Like, let's say there's an estate agent, you get this person to come and try and sell your house. Or you've got a friend and you know that this friend has got lots of contacts, and you give this person some of your product and ask her to go and sell it for you amongst the friends that she knows. The commission income is a percentage of the sales that that person has made that comes to her as commission. So let's say I'm selling something on behalf of a friend of mine. I'm selling maybe some jewelry to people that I know. Maybe I'm selling it at my church or at my social club or at my school or somewhere, and I'm selling these items for a different company. And they pay me, let's say 20% of everything I sell, I get to keep as commission income. That is what we call commission. If an estate agent maybe sells a piece of property or sells a house for you, then a percentage of the selling price that they receive, they get to keep as commission income. So our business has got the same. What we're doing is we're receiving some income, some commission for selling things on behalf of other people. So I hope that that answers your question, what commission income is. Okay, so this supplier overpaid us commission to Glamorous Limited. So what we're doing is we're selling things on behalf of the supplier, and the supplier is paying us a percentage extra as our commission. What they say is that he has overpaid us for 1,050, and this will be offset against future commission earned. So what that means is that we're not going to give him the money back. He paid us too much money. He paid us 1050 too much, but we're not going to give him back. Just next time we earn commission from him, he's just going to pay us less, because it's as if he's prepaid us our 1050. you should hopefully see that that 1050 represents income that we have already received before having done the service. So we're going to call that income received in advance. Okay? Income received in advance, somebody has paid us 1,050 Rand for something that we have not done yet. I'm sure you know how to do income received in advance. We have to go and find commission income, and commission income is just an ordinary operating income, which you will find, sorry, I must just get back to the correct page here. You will find commission income under other incomes. Commission income goes with rent and income from services rendered, but it is a separate income category because you're receiving it for a different reason. This 6,150 Rand is including 1,050 that we have received, but we've not yet earned the commission. So to do the adjustment, we're going to subtract 1,050 from commission income, and we're going to put that in the area where income received in advance goes, and income received in advance goes, and it might be surprising, it actually goes in trade and other payables. We need to put 1,050 Rand in here. Why does it go in trade and other payables? Why is some income that I've earned in advance a payable for me? What do I actually have to pay? Well, the truth is, I've earned this money in advance, so I've got to give a service to somebody for that income. He's already paid me, but I haven't done anything for it. So I owe that person this service. Either I've got to do the service for him, or I've got to give him his 1,050 Rand back. So either way, I owe him something. It's a payable, either the money or the service. So that's why we've got 1,050 under trade and other payables. Okay, so that is that entry over there, which was our supplier overpaying commission. Okay, this next one seems to be a letter missing here. Should be a P. This next one is quite a tricky adjustment. It's quite an unusual one. And what I want to tell you is that not every adjustment that you see is going to be exactly straightforward. You're usually going to get between 12 and 15 adjustments. Most past papers have about 12 and 15 adjustments. And some of these adjustments are very straightforward. Others are a little bit more challenging. What you need to do when you see something that looks a bit strange that you may not have seen before, do not panic, read it logically, think about it, and I'm sure that the answer will come to you. So before we take our next ad break, let me read this adjustment to you carefully, and then I want you to think about how you would approach it during the ad break, and we'll answer the question afterwards. Question says, provide for any outstanding directors' fees. In terms of their contracts, the directors are entitled to the following amounts earned each year. D. McKinley is one director who's entitled to 120,000, M. Connor, 80,000 Rand. But since the 1st of May, D. McKinley has been renting a house that belongs to the company. The rental agreement states that the rent per month is 9,000 Rand, and as yet, no entries have been provided for the rent. So we've got something that we haven't recorded at all. She, in other words, this director, has asked that this rental be offset against the director's fees that are owing to her. That's quite a mouthful. That's quite a long paragraph. Think about it, and we're going to talk about it after this break.
All right, more with Martin and accounting straight after this break. Welcome back, Mindsetters. From that break, we're still hanging out with Looney and Martin. That is a name. Okay, Martin, we have a question from Wow. Okay, I'll call you Ross because your first name is quite complicated. What really is accrued income and accrued expenses?
Okay, very easy one to explain. Accrued income is really something where you've earned the income, but you haven't received it yet by the end of the financial year. So maybe I have done a service for somebody and that person hasn't paid me yet. They're going to pay me the income in the future. That will be an accrued income. Accrued expenses is when we have used the service, but we haven't paid for it yet. So for example, we get our telephone bill at the end of the financial year. We've used the phone for this month, but we haven't paid for it yet. We owe the person that expense. So my accrued expense would be your accrued income. If I'm owing you the money and you've done the service for me, I still owe it to you by the end of the financial year, and you have done the service but haven't received the money yet. But businesses will both have accrued expenses and accrued incomes.
Okay. And then before you carry on, quick question from Garaba Mokele. When a tenant suddenly disappears, is it also written as a bad debt?
If a tenant just suddenly disappears and doesn't pay, then the best that you can do is write it off as a bad debt, or you could also create a separate expense in your business which says loss due to disappearing tenants or something like that.
Okay.
Okay, so you can, there are many different ways of doing accounting as long as you recognize that that is something that's costing you money.
Thank you.
All right, let's get back to this long adjustment. If we break it down into small pieces, we should be able to do it quite easily. So the first thing that we have to do is we have to provide for the outstanding directors' fees. And what this means is that we haven't paid the directors any money yet. We still owe them this money. We owe D. McKinley 120,000 Rand, and we owe M. Connor 80,000 Rand. So these two amounts are outstanding amounts which we have to pay to our directors. So let's record this first and then see how the rest of it affects it. So D. McKinley must get 120,000, M. Connor must get 80,000. If we go to our income statement, we will see here that we've got directors' fees of 80,000 Rand already. So we've accounted for 80,000 Rand of the amount that we're supposed to account for. So actually, let's just say we've accounted for those 80,000. The amount that's still outstanding is this 120,000, which needs to be added to my director's fees. So what I'm going to do is I'm going to add it here. Just find where director's fees are. There they are, 80,000. I'm going to add 120,000 because we still owe 120,000 Rands worth of director's fees to our two directors. This is exactly an example of an accrued expense because our directors have done work for us, they've come and attended the board meetings, they've managed the company, directed the company, and we owe them this money. So this 120,000 needs to be owed to them, and that will be an accrued expense. Accrued expenses, remember, get recorded in the balance sheet under trade and other payables, which are amounts that we owe other people. So under trade and other payables, I'm going to add this 120,000 that we still have to pay those directors as an accrued expense. That, though, is only the first part of the question. If we look at the second part of the question, it now becomes slightly more complicated. One of the directors, this D. McKinley, has been renting a house that belongs to the company. So he's living in the house, but it's our house as the company. Okay? He's been doing that since, let's just use a different color so you can see it clearly, the 1st of May 2010, he has been living in the house that belongs to the company. The rental agreement states that the rent per month is 9,000 Rand, and no entries have been made yet for this rent. Okay, so what we need to do now is calculate how much that rent should have been. It's from the 1st of May 2010 all the way up to the end of our financial year, which remember is the 28th of February 2011. So we need to count the number of months. It's going to be May, June, July, August, September, October, November, December, January, and we're counting February as well because our financial year ends on the 28th. So if you've been following my fingers, it's been 10 months. Okay, this guy has, this lady director has been living in our house for 10 months. What we now need to do is calculate how much rent that is. That's actually very easy because it says it's 9,000 Rand, and we're going to multiply it by 10 for the 10 months that she has lived in our house, so that comes to 90,000 Rand. So what's actually happened is that this 90,000 Rand is rent income that we were supposed to have received from this director. But we owe her money as well. We owe her 120,000 Rand because we haven't paid her director's fees. And she says, okay, look, you owe me 120,000, I owe you 90,000, let us just offset the one against the other and work out who owes who what money. That's what this offset means. She's asking that our rental be offset against the director's fees that are owed to her. Now it starts making a lot more sense if you just understand what the question means. To do it, we just go back to the income statement, and what we do is we record, first of all, the rent, which would be rent that we're receiving, which in our case would be rent income. So rent income we need to put under other incomes, and that's going to be the amount of 90,000 Rand that we've earned from this director living in our house. But she's not going to pay it to us. All she wants is that it must be offset against our, just have to find it quickly, she wants it to be offset against the amounts that we owe her. So if we go to the accrued expenses, which are the amounts that we owe her, that 30,000 Rand will just be subtracted, sorry, the 90,000 Rand will just be subtracted from the amount that we owe her over here. So out of the 120,000 that we should have given her, we're going to subtract 90,000, and we're only going to pay her 30,000 under trade and other payables. I hope that one makes sense. As you can see, it's not that tricky as long as you can just figure out what the question is actually asking you. The next adjustment is also an adjustment like that, where it now tells us that 3,400 Rands worth of stock is now out of fashion. So we've got stock, and the stock is now no longer fashionable. Okay, maybe it's a technological item where something better has been invented, and we now have to sell this stock below the cost price. It is prudently expected that the sale of these shoes will only generate 2,000 Rand. So it's going to be less than the cost price. We have to sell it at less than it is worth. So what we do now, we have actually lost money because the stock has lost value from 3,400 Rand. It's now only worth 2,000 Rand. So what we have to do is calculate how much that stock's value has gotten lost by. So we'll take the 3,400 that it was originally worth, but now we think that we're only going to get 2,000 Rand from it. So actually, what's happened is it's lost 1,400 Rands worth of value. The stock originally was worth 3,400, now it's worth 2,000, so it's gone down in value by 1,400 Rand. That 1,400 Rand is an expense to the business because our stock is going out of fashion. So what we need to do is create a special account here in our income statement, and that account we're going to call something like stock written down or stock loss. And the description isn't that important as long as the description means something along the lines of our stock is losing its value. Okay, so our stock has been written down by 1,400 Rand. That is an expense to our business. It's costing us money. At the same time, though, we have to record that our trading stock has gone down. It's now no longer worth 3,400 Rand. The trading stock that we have on hand has lost its value. It's now worth only 2,000 Rand, so we're going to have to subtract some money from trading stock. And if you remember correctly, trading stock appears here in the note on inventory. That is, remember, consumable stores on hand and trading stock. So we have to look and see what the original amount of trading stock was. If we go back to our trial balance, we see that the trading stock was, just find it here, there it is, 36,700 Rand. So that's our starting balance that we should record in inventory. So plus 36,700 Rand. And then this 36,700 Rand has lost 1,400 Rand's worth of its value. So that is our trading stock now, correct valuation, the 36,700 we started with, minus the fact that some of it is now gone out of fashion. Okay, our next adjustment also deals with trading stock. So if we look at it, we will see this is the second part of the physical stock count. It says a physical stock count at the end of the year highlighted that 800 Rands worth of stock had gone missing. So usually when you do the physical stock take, you need to calculate the trading stock surplus or the trading stock deficit. Here they've told me that the 800 Rands worth of trading stock has gone missing. So what that means is that they have actually given us our trading stock deficit. All we now need to do is record it appropriately, and you need to know where the trading stock deficit goes. If it ends up being a surplus, it is going to be an income. If it ends up being a deficit, it is going to be an expense. So in my income statement, I'm simply going to find the part for the trading stock account, the trading stock deficit, which appears here as an operating expense. Here is a trading stock deficit, and that trading stock deficit, they've actually given us the answer. It's just 800 Rand. We don't need to calculate anything more. But at the same time, we have to take care that our physical valuation of the trading stock has gone down by 800 Rand. So we have to go to our balance sheet, to the section on inventory, and we must subtract 800 Rand over here because that is the value of the stock that is now gone missing. All right, let's have a look at the next adjustment here. The next adjustment is the adjustment dealing with a ratio. They've given us the ratio that says operating profit on sales for the year was calculated to be 30%. Very often in a question on income statement and balance sheet, they throw in the answer to one of the ratios, and you need to use it to calculate one of the other figures. Okay, so now they've told us that operating profit on sales for the year was calculated to be 30%. So that means operating profit over sales times 100, that's your ratio, your formula, is equal to 30%. What we now need to do is look at the income statement and see what numbers have been pre-printed for us. And if we go to our income statement, we will see that we have been given our sales number here. Our sales number here is 700,500. What they've now told us is that our operating profit on sales, in other words, here is our operating profit. They've told us that this number, which I'm going to just record as an X now, it's the number that we can work out, this number of operating profit over this number, our sales, is equal to 30%. So we can do the little calculation. We can say that the operating profit, which I've just called X here, over 700,500 times 100, all I've done is I've taken this formula, operating profit over sales, and substituted operating profits and sales in there, and I've got that answer to equal 30%. So what this question is requiring us to do, we are going to solve for the missing operating profit number over here by using the ratio to give us the answer. Okay? So if the operating profit over 700,500 times 100 is 30%, we can now solve for this. So what that means is that X over 700,500 is equal to 30 over 100. I've divided both sides by 100. And then to get rid of this 700,500, all I'm going to do is multiply both sides by it. So I'm going to be left with X is equal to 30 over 100 times by 700,500. If I solve this little equation, then I'm going to get my operating profit. So let's do that quickly. So there's the equation on the right-hand side. I'm going to take 30 over 100 times by 700,500, and the answer that I get is my operating profit is 210,150. So I can immediately go down here to where I've written my X, I can erase it, and I can write here the answer of 210,150. Just going to call up the calculator again to check that that number is correctly copied, and there we go. That's given us our operating profit. Remember, when they give you the answer to a ratio, they will want you to calculate some missing number based on what that ratio gives you. So in this case, they've given us operating profit on sales, so it's clear that they want us to calculate something. My tip for you is, when you see a ratio, immediately write down the formula of that ratio, and then look through your information to see which part of the ratio you have. Then you need to look and see which part of the ratio you don't have, and use the answer to the ratio to work backwards to calculate your missing number. So that is how we calculated our operating profit on sales. Okay, our next one here, let me just get down to where we were. Our next profit tells us our next piece of information tells us something very similar. It tells us that let's get to the bottom here. Net profit after tax on sales for the year was calculated to be 16%. This one we're going to do exactly the same way as the operating profit on sales. What I'm going to do is write down the formula. It's net profit on sales times by 100 is equal to, not 30, in this case it's equal to 16%. Okay, so it's time for another ad break again. What I'd like you to do, see if you can think about how we would solve this little one to calculate our net profit after tax.
All right. Mindsetters, don't go anywhere. Think about that question, and I'll see you straight after this. Welcome back, Mindsetters. We are still doing accounting with Martin and Looney, and I won't waste any more time. I'll take it straight back to Martin.
Okay, thank you, Mindsetters. Thank you, Looney. What we've done now is I asked you during the break to think about how you're going to calculate this missing number from our equation, where we said net profit after tax on sales for the year was calculated to be 16%. Very, very easy. All you're going to do is solve for the net profit, and if you've solved this correctly, it should be 16 over 100 times by our sales amount is going to give us our net profit for the year. So if we go back to my answer sheet here, where my financial statement is, you can see over there I've got the sales amount. If I work out the 16 over 100 of that, 16 divided by 100 times by the sales amount of 700, 500, I'm going to get my net profit after tax for the year of 112080. So let's go down to the bottom of this page, and there's my net profit for the year right at the bottom. That is this 112080. So you can see here, I'll just check that I've done it correctly, 112080 comes to be my final answer at the bottom there. So we've used the same method to calculate two missing numbers, the net profit at the end of the year and this operating profit which appeared over there. I'll just find it, there's our operating profit. So now something that we've had to do, during the break, just to save some time, I got to the end of my other adjustments and I just closed all the brackets and wrote the answers to the calculations over here. Okay, so what's important to realize now is that there was one figure that wasn't given to me here, which is my sundry expenses. This number here is the missing number. I don't know what it is. And there are the other numbers that are missing. This taxation for the year is missing, the profit before tax is missing, and the interest expense is missing. So I haven't been able to complete my income statement yet. But there is enough information to solve for the answer. So you see we've been given our operating profit, and what we should now do is we should have a look at what's been given to us. We've got sales, we've got cost of sales, and we've got gross profit. Let's just take that away because we don't need to highlight that number anymore. And we've got our other incomes, which is this 90,000 and this 5,100, which I've calculated by closing my brackets off. If I add those numbers together, I get 95,100 Rand, which is just the sum of these numbers in the box. That is going to be my other incomes. Now I can start working down and getting all of my missing numbers over here. And Mindsetters, let me tell you that that is very, very, very important to do when you are answering an exam question. Because even if you've made a mistake, that doesn't matter. The marker is going to give you operation marks or method marks for calculating all of these little subtotals. So I always tell my learners in my classes, when they see that there are 5 or 10 minutes left of the examination, then don't try to do any more adjustments. What you need to now do is come back and get all of those little method marks by calculating all of the different subtotals. Because you don't want to get to the end of the exam and struggle about one more adjustment and then leave out all of the other calculations by closing the brackets off and getting the missing numbers. I saw there were 10 minutes left of the show, so I did that during the break. So if we need to calculate our gross income for the year, we know that it's those two numbers added together, so we can quickly do that and say 95,100 Rand, which is my other income. That must be added to my gross profit of 342,500. That is going to give me a gross operating income of 437,600 Rand, which I'm going to write here, 437,600. Now, they've told us something very important. They have told us what our operating profit is, but it's impossible for us now to work out what the operating expenses are by adding all these together, because the problem is that our sundry expenses are missing. But if you know that my gross income minus my operating expenses equals my operating profit, we know that this number of 437,600 minus this total is equal to my operating profit at the bottom of this box. So now it would be easy to actually work out what my operating expenses are. So if you do that, what you could do is you could look and see that the 437,600, which was still in my calculator, 437,600 is my operating profit, minus this answer gives me 210,150. So if I subtract 210,150, I will get my operating expenses. So let me subtract 210,150. So that gives me the operating expenses in total are 227,450. 227,450. Mindsetters, something very important. What have I left out here? These are expenses and get subtracted. Please, please, please remember your brackets. The brackets are very important. Every time there is an expense in the income statement that is being subtracted as a total, you must show your brackets because your examiner is not going to mark it correct if there are no brackets appearing there. Okay, so now that we know that our total here is 227,450, I'm sure you can see how we would work out our sundry expenses here, this missing number where I've put the green arrow. All you would do is you would take this 227,450 and subtract all of these numbers that appear in brackets, and that would give you your sundry expenses. So the way to do that is we'll quickly just calculate the answer. It's my 227,450 minus 1,750 minus 890. So I'm subtracting all of my operating expenses to get the missing one, minus 16,600 minus 2,410 minus 200,000. Always be careful with how many noughts you have. Minus 1,000, minus 660, minus 1,400, and then finally minus 800. So the answer to my missing sundry expense is 1,940 Rand, which I'm going to just include here. That's the missing number. 1,000, let's get it again, 940 Rand. So you had a partially completed income statement, which you would then use to calculate the missing numbers. Okay, now the question also tells me some other facts. It tells me that interest expense is the missing figure, and it needs to be calculated. There's no outstanding interest for the current year. So once again, what you will do is you will go to the bottom of your income statement, and you will see that here is an interest expense. We don't know what this number is, but we can do the calculation pretty easily. To work out what the missing number is, we can work backwards. Okay, we also need to know what the taxation for the year is, and the taxation for the year, I think, is going to be the last adjustment that I'm going to have time to do. So let's have a look at the taxation for the year. It tells me that income tax for the financial year was calculated as 72,400 Rand, but this has not been entered. So remember, a company pays provisional tax every 6 months of the year. Pays provisional tax twice, and then at the end of the year, they calculate what the real income tax should be, and that income tax is compared to the provisional tax that they've paid. So when you see the income tax adjustment, what you should always do is go up to your trial balance and see what the SARS income tax number was. So the SARS income tax number was 75,700 Rand debit. That means that we have already paid SARS provisional tax of 75,500 Rand. What, however, has happened is that we've got our tax assessment, and the tax assessment was 72,400 Rand. So we've paid provisional tax of 75,500, but the tax that we should pay for the year is 72,400. To do this adjustment is not hard. What we do first is record the taxation for the year, and what goes in brackets here is the real tax that we should pay. Not the SARS income tax amount, but the income tax amount that appears in the adjustment. So in this case, it's going to be the amount of 72,400 Rand, which I'm going to put at the bottom here, 72,400. And now I can work back from here. From the end total, I can calculate these three missing figures. Try it at home. I'm sure you'll be able to get it right. At the same time, though, I have to look and see that I've paid 75,500 already, but the tax was only 72,400. So I have overpaid my tax. I've overpaid my tax by the amount of 75,500, 75500 minus 72,400. So the provisional tax that I should have paid less the provisional tax that, less the income tax that I have paid is 3,100 Rand. So actually, at the end of the financial year, I've paid SARS 3,100 Rand too much tax. And then we need to know that this 3,100 Rand is going to be included in trade and other receivables. So I'm going to receive 3,100 Rand from SARS back in taxes. So the last thing that we need to do here is we have to go back to our balance sheet, and in our balance sheet, which is trade and other receivables, I'm going to have to add the 3,100 Rand, which is the difference between the provisional tax that I have paid and the tax that I should have paid. Now we've done pretty much all of the adjustments except shareholders for dividends. Have a look at that one, see if you can do it, and then see if you can try and get this thing to balance. I'm sure you'll get it right, because from the questions that I've received and from the answers that you've given us, you know your stuff. So good luck with your exams, Mindsetters, and thank you.
All right, thank you so much for tuning in, Mindsetters. Thank you to Martin for giving us a great lesson. Everything of the best while you prepare for your final exams. We love you. Bye.